Good afternoon, it's 1 o'clock and time for the Wall Street Crossover Show with Darren Sinden, who is the market commentator for Admiral Markets and sponsored by Admiral Markets as well. How are you this afternoon, Darren?
Yes, I'm well, thank you, Zach. We're sort of in a bit of a lull, really, perhaps ahead of the two major events of this week, the ECB meeting tomorrow and then non-farm payrolls on Friday. And of course, it's a long weekend in China as they mark the end of the Second World War. So we're sort of in an in-between stage, I think, in the middle of the week.
I think we've got Labour Day as well, isn't that right?
Labour Day on Monday, yes.
So we're all over the place.
Yes, so a long weekend in prospect as far as the US markets are concerned as well. Yeah.
Right, well, let's go on to the slides that you brought in today. Data released over the European session.
Okay, again, a reasonable amount of data coming out this morning, but I just picked on three pieces that caught my eye. So first of all, from the UK, the construction PMI number for August came in at 57.3, a slight disappointment there because that was below the forecasts of 57.5. Nonetheless, it was better than the prior read in July, 57.1. So perhaps slightly surprising that it dipped in August, but I suppose you could add a certain amount of seasonality to that. But of course, if you step outside the office here and look around, the skies appear to be full of cranes still. So London, at least, is doing quite well still construction-wise. And then, as far as the Eurozone is concerned, we had producer price index for July on a year-on-year basis out this morning. Once again, just confirming, where the deflationary pressures lie. The number came in at minus 2.1%, bang in line with the forecast of the same figure, minus 2.1%, and exactly in line with the prior read of minus 2.1%. But nonetheless, that will, I'm sure,
a horror story. It's a horror story of a figure, isn't it?
But it is really, in different times, it would be great to see, goods costing less when they leave the factory gate. But the truth is that that's not what the ECB wants, and they would rather have inflation in modest double digits, trying to stimulate the economy and showing that there's excess demand, which at the moment is not clear at all.
Do you think they would act tomorrow then on that basis?
Well, I don't think that individual figure will change it, but I'm of the opinion that they could, they could increase the size of the QE platform and perhaps speed up the, increase the amount of monthly buying that they're doing.
Tomorrow would be the day for that, especially ahead of the Fed. It would give them a bit of leverage in the sense of weakening, or the differential between the euro and the dollar would be that much
they
more
probably
marked.
They probably do. If they're going to do something, they probably want it to have an impact, and they probably want to achieve a first mover advantage. I'm not sure how quickly they can move to actually increase the pool of capital, whether they need to seek further approval for that, or they could at least propose it if they do need to seek further approval.
A Draghi comment comes through or something, a bit of talking.
Yes, absolutely. He could well talk about what he's going to do before they actually are able to implement it. So right. The press conference could be very important. There was some more encouraging news, though, from Spain. The unemployment change for August was released today. This is the number of new claimants that were added over the month, and it came in at 21,700, well below the forecast of 35,300, though nowhere near as good as the figure for July, which actually showed a drop of 74,000. But nonetheless, unemployment would seem to be heading in the right direction in Spain, and as we've seen from, if you want to look at a hot spot for the European economy, Spain certainly appears to be the place to be at the moment.
Never thought I'd hear that.
No.
I didn't think I'd be hearing that for quite some time.
No.
Right, next, European movers.
Okay, well, a couple of transatlantic related stories here. So first of all, Ashtead, which is ticker AHT in London, 971 pence, up around 5.89%. This is a plant hire group with a very large operation called Sunbelt in the US. They reported this morning, and they reported strong results. Pre-tax profits were up 23% on revenues that gained 35% over the same period last year. And the management's very upbeat, talking about being on track to open 50 new locations in the coming over the full year, and the market likes what it hears there. And then Alstom, French engineering group, one we've touched on several times in recent months, ticker ALO in France. 28 euros, up around 2.28%. I know we've said this a couple of times over the course of the summer, but their deal to sell their energy assets to General Electric of the States is edging ever closer to completion, and the rubber stamping of the deal in Brussels is expected in the next couple of days. So as I say, they're up 2.28% against a sort of relatively flat backdrop for European equities.
Right, okay, let's move on to the M&A or proposed M&A.
Right, well, Tesco, one of the UK's biggest grocers, that's ticker TSCO here in London, trading around 185.5p, has chosen MBK as the preferred bidder for its South Korean unit, unit Home Plus, by my teeth in, but it didn't specify the terms of the MBK offer. Nonetheless, sources close to the bidding process have suggested that Tesco received 3 bids in the region of around £3.8 to £3.9 billion, or 7 trillion Korean won. But MBK's won the day. KKR and Carlyle Group were 2 of the other big names in the hunt for the Tesco South Korean unit. If the sale is completed, of course, it will mark the first major disposal for Tesco since its credit rating was cut to junk by
That was a bit harsh, wasn't it?
Well, it was, yes, really, for a business that's such a cash-generative one, but that was a big slap on the wrist, I suppose, over the accounting scandals. But S&P and Moody's
probably closer, but if I remember rightly, was the 3.86 billion is like half of what the market was calling.
I don't know that. Yes, I think it's not any kind of.
It's not a good figure, is it?
No, it's not. But I think it's that's what the PE bidders were prepared to pay. So that's really all Tesco could do, as it needs to get out of these kind of operations, is to accept that. MBK, just for a bit of background, is based in Seoul, so it's a Korean business. It's actually one of Asia's largest PE firms, and in this deal, it's been backed by Temasek, the Singaporean government investment fund, and the South Korean National Pension Scheme.
Names.
So, yeah, I mean, yeah,
big guns.
Plenty of firepower behind it, but it obviously hasn't felt it needed to overpay to secure this business. If indeed it does, but so it's hard to see why.
I might because I just remember at the time 7-8 billion was the potential sale price there. So I'll check my homework. But
yeah, well, let's
from memory, well, maybe that's why the share price is not flying away. But all right, let's go on to the. Away from the intrigue, US data points.
Okay, well, there are a few points out in the US today, but just pick on a couple because I think these are probably the most relevant, given what we're talking about rate rises and possible actions of the Fed in September. So first of all, ahead of the non-farm payrolls on Friday, we have the ADP employment report for August, forecast for 210,000 jobs created against a prior read of 185,000, but just to sort of flag how volatile and how hard this number is to call, last month's read of 185 was 30,000 jobs below what the market was forecasting for July. So read what you will into that, and it also isn't, as we always say, necessarily that good an indicator for what the payrolls will be.
Are we wishing for a big figure or a small figure? That's the other thing. And the same with the payrolls. What are we wishing for here?
Well, I don't think the Fed feels confident enough to raise rates in September. So to my mind, I think they do better off to wait till December.
But if it was 300 or something like that, they'd have to do something.
Yeah, I think if it came in very strong, and if the unemployment rate particularly was strong, or rather a strong decline in the unemployment rate, then I think their hand would effectively be forced. If we get a middling number or something slightly less than estimates for Friday.
But if you want excitement, you're looking for towards 300.
You are, yeah, absolutely, yeah. And then another number that should have some influence in the Fed's decision, factory orders for July. This is the month-on-month change. Forecast to come in at plus 0.9%, down from the jump over in June of plus 1.8%. But just again to flag how wide the opinion is on this number, estimates vary in terms of the forecast from minus 0.4% to plus 1.3%, so a big divergence of opinion there. But what I would say is that this number has been declining over the last 12 months, and I think this is the kind of figure that the Fed would like to see, posting consecutive gains for it to feel confident that it can go ahead and raise rates.
Okay, let's move on to the US pre-market movers and levels.
Okay, well, the first pre-market mover is a stock called Ambarella. Sounds like a Rihanna song, but it's not. AMBA is the ticker here in the US, $82.20, and down 8.2% pre-market. The company guided in line on its earnings call, but the market had hoped for further growth from this video chip maker, and their chipsets are in all sorts of portable devices, drones, portable video cameras and alike, and it's been a growth sector, and I think the market, the market doesn't like the idea that it may actually be stalling now, that growth. And it's also notable that GoPro, one of the other players in that action video space, shall we call it, as also weaker pre-market. And then a stock moving the other way, Wright Medical, WMGI, the ticker there in the States, $25.30. They are up 10.38% pre-market. A nice simple story here. They've got FDA or Federal Drug Administration approval for their Augment bone graft treatment, and the market likes that obviously, so up they go. And then in terms of levels to watch today, no great shakes despite the swings in European equities this morning, all within the range of the levels that we picked out yesterday. So really just changed them slightly, but 60.50 now on the downside in the FTSE and 61.49 to the upside. We just trimmed that to make it a little bit more palatable. The DAX 99.28, so we're still on the downside below that 10,000 handle, plays 10,130 on the upside. And over in the US, after another sharp decline yesterday, 1903 now is the downside on the S&P, plays 1926 to the upside. And for the Dow, 15,980 on the downside, plays 16,130 to the upside. The indications for US markets, by the way, are for them to open slightly better and recoup some of yesterday's losses. And then if we move to the currencies, no real change here in euro dollar. 112.30 on the downside, plays 113.04 to the upside, so very much as you were. The Aussie has slipped a bit again today, so now 69.47 is our downside level, plays 70.30 on the upside. I think a proper break below 70 even will be quite a psychological blow to the Aussie, but we'll have to see what happens there. Dollar yen seems to have settled around 120 for the moment, so 119.75 on the downside, playing 120.40 on the upside. And cable hasn't finished, obviously, retreating at the moment. 152.25 now, our downside level, plays 152.95 to the upside, and it seems every day we're getting
something sinister going on there.
There isn't, yeah, there is. It's I'm not privy to what that is, but the weakness in cable is very surprising indeed.
Right, okay, well, we'll move away from cable and go on to gold in focus.
Yes, well, really, gold's something that we haven't touched on for some time, and the question I've asked is what next for gold, and the reason to say that is, well, gold prices have rallied recently as concerns over the wider markets saw a return of safe haven buying. That was something that if I'm honest, I hadn't anticipated. I thought that safe haven flavour of gold had sort of been washed out completely, but it was a reasonable rally. On the 24th of July, we posted a low of $1,072.36, and we closed yesterday back up at $1,140.28 per troy ounce. So not a bad bounce. Having said that, gold remains very much in a bear trend and is below both its 200-day EMA line, which is the red line there on the chart, and what I would term a downtrend channel, that dotted straight line there, extended lower from the March 14 highs. And just to put the sort of performance of gold into sort of context for the year as a whole, it's still down 3.5% year to date. So I don't know is the honest answer. I mean, part of me thinks it might retest to that downtrend channel again, but I think the bias is still to the downside, if I'm honest. But
it was helped by the China panic, let's say. So
yes,
if we get more of that, let's say, that might give the bulls what they want above 1150.
And it could do, certainly. And obviously, we saw a bearish squeeze in oil, for example, another market that's been trending lower very strongly. So these things don't always go in straight lines, and counter rallies can't be completely discounted, certainly.
Darren Sinden, market commentator at Admiral Markets. Thanks for the Wall Street crossover show today. We'll be back at 1 p.m. tomorrow.